Let's get to SoFi CEO Anthony Noto joining us in a first on CNBC. Always good to see you. Student loans, at least the analysts seem to be a bit short here in terms of what they anticipated. It may have come in, I think on the call, you sort of seemed to indicate you expected that surge. But tell us a bit about that and what you're seeing there, whether it's the cadence. Is it a one-time thing, Anthony, and it gets back to normal, or is there going to be significant demand for these loans for some time?
Yeah, so David, I think there's just a misperception that student loans were a big driver in the quarter. They were not. 67% of our absolute growth in revenue dollars was from non-lending, so our technology platform business, as well as our financial services business, which includes checking and savings, invest, and credit card. We did see a recovery in the student loan business from about $400 million of origination volume to $900 million of origination volume, but it wasn't that big of an impact on the overall P&L, just given how those loans are valued. So the bigger driver of it was the really strong performance from tech platform and financial services, and still continued strong demand for personal loans. On the student loan side, to answer your question specifically, we think it will be a slow, steady, gradual increase over time, and that we're not going to get back to where we were in the fourth quarter of 2019, which was about $2.4 billion origination volume a quarter for some time period, probably not until 2025.
Got it. Well, on the call as well, you seem to try to focus the analysts on the technology platform. Explain to our viewers what you're talking about here, Anthony, when you say the pipeline there is pretty visible and it's the most robust I've seen. Just explain what exactly that means.
Sure. Our technology platform has a number of different products, but we're essentially providing processing, debit and ACH processing on the platform with a number of APIs that allows a developer to build just an app on top of it. It could be for a consumer-facing bank. It could be for B2B services. It could be for government payment services. In addition to that, we have what's called the core banking platform, which is branded Technisys, which is really an operating system for different products, whether it's checking or savings or a credit card or loans. We bought two businesses over the last 5 years to really power SoFi, but they also power third parties, about 135 million accounts and over 8 billion transactions a year. And so what we're seeing in a big way is traditional banks, large incumbent banks, looking to upgrade to a modern processor, which Galileo is in the cloud, as well as a modern core. And so we've, throughout the quarter, have been responding to a number of RFPs from the largest banks in our country as they're evaluating updating that technology. We're also seeing a lot of demand from other incumbents that want to switch to us that are not big, large banks, but they are financial institutions, or they have a large amount of payments or direct consumer offerings in terms of checking and savings accounts or other financial products. So seeing a nice pickup there and a need for the industry to upgrade their ability to manage assets and liabilities in real time.
Anthony, it's Sarah. You sounded pretty upbeat about the macro environment on the call. Can you tell us, first of all, you have a unique demographic that you serve, and what sort of consumer trends you're seeing so far into October?
Yeah, so I want to be very clear for the audience that SoFi is taking market share from incumbents, and so we're not really a key indicator of the economic environment or the cycle. We're a secular grower, which means we're gaining market share from an existing market, even if that market's not growing. So we're still seeing very strong demand for our loan products that are very differentiated. Our SoFi checking account, we offer 4.6% interest, no fees. You get a free certified financial planner. You can pay anybody, anywhere with your phone or debit card or P2P by just having their phone number. That product is seeing a significant amount of demand as well. And in that product, we are seeing an increase in deposits per account, which is more of a measure of how the economy is, as well as increased spending per account, as opposed to just being driven by new account openings. We're also seeing good increases in AUM. That's in our invest business. That's clearly a market share gain on the back of doing 3 IPOs. So we're still seeing really strong demand for our products. I would say more broadly, if we're going to be in an environment that's higher for longer, I'm really worried about the conditions in the financial industry more broadly, and that will cause us to be more conservative and more balanced to make sure we maintain the right safety and soundness of our balance sheet and our ability to serve our members.